Very good afternoon, everyone. I hope my voice is audible. Thank you to the ones who are present here with us today. We will begin shortly. We're just waiting for some more of our audience to join in, and post that we will get started. A quick yes or no on chat, if I am audible, would be great. Thank you. All right. All right. Thank you for the confirmation. Manny, Mr. Bhavesh, Mr. Shyam, Sumit. So, in the meantime, I'd like to know how many of you here with us today are actually first timers. You're joining us for a webinar with Mr. Akella for the first time, or do we have repeat participants who have been attending our webinars? I do see a few names that I remember. Okay. Uh, Glad to see Mr. Shyam. Okay. Okay. Great. Third session. Okay. All right. So I'd also like to know how many of you are, what are you expecting from the session today? A few bulletin pointers on the chat would be nice. Okay. All right. We have quite some first timers here today with us. Very nice. So I'd like to mention that we have one webinar on a highly informational GST topic with Mr. Akela every month. So those of you are attending first time will receive our invites over the coming months whenever we have a webinar. Okay, Mr. Arnab, third time. Okay, so Ms. Nandini has mentioned inverted structure clarification. Okay, so Ms. Nandini, we've noted this down. Also, audience, I'd like to mention you can also use the chat function that you will see on your, Q&A function, that is Q&A button. You can use your questions, you can put down your questions there as well. That will help us track all the questions. If not, you can still use the chat. Just that chat will have a lot of inputs, so we might miss the questions, but I'll try my best and keep track of it. All right, so we will begin in say about 5 minutes. Thank you all for your patience. Okay, Mr. Venkatraman noted RCM on dwelling, house rent, RCM on rent. Okay, all right. So I'm glad to tell you that there are some topics, questions that I'm seeing here that we will be covering today. Uh, Mr. Akella has he already has these points on the presentation, in fact. So as we proceed with the presentation, we'll definitely look at these. Okay, great. Yeah. So, Mr. Arnab, we will share the presentation as well post the session. I noted, Mr. Narayana. All right. Once again, thank you all for your patience. We will get started. Once again, a very good afternoon to everyone present here. Special thanks to our chief speaker, Mr. Akella, for joining us on yet another webinar today with us. I'm absolutely glad to have you here with us today, sir. I'm sure this session would be really helpful for the audience who will be hearing directly from you. I look forward to a wonderful session with all of you. I am Siddharth and I handle product marketing for the digital lineup at Web Solutions India. So let's move forward. So what I'm going to do is I will quickly run through a few slides about the company, the services and solutions that we offer, and then I will introduce the speaker and following which Mr. Akella will take forward. So let me go ahead and give you a small briefing about the company. Web is a 20-year-old company as of today. We were initially known as Wipro e-Peripherals, which was part of Wipro itself, and we were the peripherals manufacturing uh, division of the company. And in 2000, we became an independent entity that is Web Solutions. So from there on, we have evolved in time, and we have multiple solution offerings as of today, which I will show you in the next few slides. So what you're seeing here is the solution offerings that we have: managed print services, digital transformation solutions, which covers two different type of solutions, which you will see in the next slide. And thirdly, we have intelligent office automation solutions. So let's go ahead and I will go to the next slide. Once again, audience, I hope my voice is loud and clear. All right. So as you can see, these are our solution offerings. Serial number one covers managed print services. Web Solutions offers the latest range of intelligent office automation solutions as well, which I will explain in the next serial number. Now, the business in management services is such that we deal with printing hardware based on customer requirement, and the customer would be charged per print. Aside this, we also handle asset management, and the full service and support across the nation is handled by us as well. We are in fact known as India's number one MPS company. Moving on, Web is the authorized distributor alongside Rico Japan to sell Rico products in the country, and we have a wide range of enterprise digital printing solutions on offer. We have a host of MFPs, that is multifunction printer models, on our catalog. And aside this, we also handle the support part throughout the country. All right, let's move on to serial number 3 and 4. This is the digital transformation side of solutions that we have. Serial number 3, that is GST. We have an all-in-one GST solution, a one-stop solution which would cover all your reconciliation, filing, all your taxation needs. That is, data preparation is built onto the platform. We have 100 different methodologies of validation. We have various modules, separate modules for e-way bill, e-invoicing. We also undertake most ERP integrations through APIs, SAP, Oracle, Microsoft Dynamics, Navision, all of it. We also have a standalone solution called Manage GST Filing, where we have a dedicated team which will handle your filing and reconciliation requirements. Serial number 4, that is document management solutions. We have an enterprise custom tailored solution that is built on two foundations, that is document management and workflow automation. With this, we are able to offer custom process automation solutions for all organizations. For example, HR, procurement, management of change, contract management, and so on. So that is our solutions and a quick view of our clients. Good afternoon, Mr. Mailadri. Good afternoon, Mr. Shailesh. I have noted down your question. We'll definitely take it up towards as the session goes on. Okay. So a quick slide for all of you that you're seeing here. Now we do not have time to show a demo of the solution today because it is going to be solely with Mr. Akella today, who will be interacting. So what I'm going to do is I will launch a poll for all of you. So we would like to know if any of you are actually looking or exploring a viable GST invoice solution right now. So if you would be interested, based on your time and availability, my team will be able to schedule a free demo of our solution where we will be able to showcase a full-fledged demo of what our solution offers to you. So I will leave this poll on for the next 1 minute. Once again, thank you all for joining. To the ones who joined a little later, I would like to mention that we will be taking up queries answered by Mr. Akella personally. So the ones you have, you can use the Q&A tab or simply put it on the chat. As the session goes, we will take it forward. Okay, great. Thank you for your inputs. I will end the poll right now. Okay. Without any further ado, let me introduce our speaker today. Let's welcome Mr. Akella. Mr. Akella is an independent indirect tax advocate. He graduated in 1989 from Birla Institute of Technology, that is BITS Pilani in Electricals and Electronics Engineering. He is also a gold medal holder who completed LLB from Andhra University in the year 2001. Mr. Akella is also a certified fraud examiner as well, but currently not active. He has worked in the Central Board of Indirect Taxes and Customs from 1994 to 2008. He's also worked for BSR and Co., that is KPMG, Bangalore from 2008 to 13. His other major stints were with Toyota Kirloskar Motor, Bidadi from February 2013 to November 2016, and lastly Biocon India from November 2016 to June 2021. Mr. Akella is also a member of indirect tax committees of various trade bodies such as BCCI, CII, FICCI, and so on. Mr. Akella also writes articles actively in TIOL, Tax Sutra, on various tax issues. He is also an active speaker and panelist on various forums on indirect tax matters. He comes with more than 27 plus years of experience in the field of indirect taxes, with exposure in various segments, domains such as government, consultancy, and also industries such as auto and pharma. Mr. Akella currently practices as indirect tax advocate, assisting various clients on all aspects of indirect taxes at all levels. I take great pleasure in introducing him on yet another webinar. I'm sure the audience is looking forward to directly hearing from you, sir. Over to you, sir. Thank you.
Thank you, Siddharth. Thanks to all the participants for taking time out and joining us today for this session. So let us start on with the slides. See, today's session's agenda is as under that what are the recommendations of the 47th GST Council that I will be touching upon, and whatever the clarifications that were issued in respect of goods and services, and then the other constitutional changes and the clarifications issued. Then, in particular, the tax changes in FMCG, real estate sector, and healthcare sectors also will touch upon. But major time that I would like to spend to answer your questions in particular. Let us move on to the first slide. Yeah. So the rate were rationalized in order to address the inverted duty refund scenario, and also as per the recommendations of the group of ministers in respect of certain goods as well as services. And some of the exemptions extended in the past were withdrawn. Hitherto, the GST was exempted on the specified food items, grains, etc. were not branded, or right on the brand has been foregone. It has been recommended to revise the scope of exemption to exclude from it the packaged and pre-labeled retail packs in terms of Legal Metrology Act, including the pre-packed, pre-labeled curd, lassi, buttermilk, etc. So this is a major blow, but we'll see if any of the parties are affected, that what is to be done and all that in the coming time. The next slide, please.
Yeah. So, sir, before you go to the next slide, let me launch one poll for our audience.
Yeah, please.
So, audience, I hope you're seeing this on your screen right now. We'd like to know whether the inverted duty refund issues were addressed by rate rationalization or not. Let me leave this on for the next 1 minute. Okay, also audience, I would like good interaction from all of them present here today. This is in fact our approach with Mr. Akella. He'll also be taking up some queries personally for the ones who would like to interact with him. Okay, we have 50% which says not sure.
I think more or less the participants who are keen to answer this have answered it.
Correct.
So I see that many people have responded saying that it is not sure, but as rightly sensed by the government, even the government also felt that whatever measures that they have taken during this 47th council meeting is not adequate. So in the 48th GST council meeting, you are bound to see some more rate rationalization to address the inverted duty refund structure.
Okay. All right. I will stop sharing the results and moving on to the next slide.
Yeah, exemption on following goods have been withdrawn. That checks, loose or in the book form, maps, hydrographic or similar charts of all kinds, including atlases, wall maps, topographical plans, globes printed, parts of goods of heading 8801. Next slide, please. And some of the clarifications issued in relation to the goods are that electric vehicles, whether or not fitted with a battery pack, are eligible for the concessional GST rate of 5%. Previously, there were a lot of debates around it, that if the vehicle is fitted with a battery pack, whether it is entitled for the concessional rate of duty, because the battery pack as a standalone is attracting a higher rate of duty. So when it is a composite supply, whether the principles of composite supply are to be adhered, and the entire vehicle with a battery pack has to be adopted at a lower rate or not is a confusion which is going on. And some of the ARs have also contributed for the confusion. Now the government has clarified it that it is going to be at 5% rate only with or without the battery pack. Similarly, on the fly ash bricks also, there was a lot of dispute because the government has prescribed a certain percentage. So for MSME sector, determining the correct percentage in order to apply the correct rate of duty applicable thereon is becoming a big task for them. Now, as a simplification measure, they have omitted this condition. So all kinds of fly ash bricks attack the same concessional duty irrespective of the fly ash content. Similarly, for the stones covered under serial number 123 of the schedule, that whether it is polished or not in the minor ways, attracts the concessional rate of duty of 5%. So all these measures are mostly addressed to the MSME sector only. Next slide, please. The GST rate on all forms of mango, including the mango pulp, attract 12%. Entry is also being amended to make this amply clear. Raw or fresh mangoes continue to be exempt because they are considered to be the agricultural produce. And the sewage treated water is exempted from GST and is not the same in purified water provided under serial number 99. So the word purified has been omitted to make this amply clear. Similarly, nicotine Polarex gum attracts a GST rate of 18%. It has been clarified now. Next slide, please. So some of the clarifications issued in relation to the services are due to the ambiguity in the GST rates on supply of ice cream by the ice cream parlors. GST charged at 5% without ITC on the same during the period from the inception of the GST till 5th of October 2021 has been regularized to avoid any unnecessary litigation. But henceforth, it has been clarified that the ice cream parlors supplies are going to attract 18%. Unfortunate that many have felt that it should ideally attract 5% because that they are foregoing their input credit. But the government has thought otherwise, that ice cream being a premium commodity and all, that they have classified it at 18% rate. And application fee charged for entrance or for issuance of eligibility certificates for admission or issuance of migration certificates by universities is exempt from the GST. It has been clarified. Unfortunate, last week in Karnataka, AR decision says that printing of question papers is exempted activity, whereas printing of the answer sheets is a taxable activity. Very unfortunate, still ARs are taking such kind of a views. And then gin baled fiber is covered under entry 24B of the notification 12 of 2007 and the category of raw vegetable fibers. So exemption under this entry is being rationalized. Next slide, please. So services associated with transit cargo, both flown from Nepal and Bhutan, are covered by the exemption. It has been clarified. And activity of selling space for advertisement in the souvenirs published in the form of books is eligible for a concessional rate of 5%. So all print ads are going to be charged at 5%. And renting a vehicle with operator for transportation of goods on time basis is classified under 9966. Rental services of transport vehicles with operators and net tax is GST at 18%. And GST on such renting, where cost of fuel is included in the consideration charge, is being prescribed at 12% because petrol and diesel are not subsumed under GST. That is the reason the concessional rate of 12% has been prescribed when compared to the 18% otherwise. Next slide, please. Allowing choice of location of plot is part of supply of long-term lease of plot of land. Therefore, location charge or preferential location charges are part of consultation charge for long-term lease of land and shall get the same treatment under the GST. It has been clarified. And the services provided by the guest anchors to the TV channels in lieu of honorarium also attracts the GST. It has been clarified. And additional fee collected in the form of higher toll charges from vehicles not having FASTag is essentially payment of toll for allowing access to the roads and bridges to such vehicles and shall be given the same tax treatment as given to the toll charges. It has been clarified. Next slide, please. And services in the form of assisted reproductive technology and in vitro fertilization are covered under the definition healthcare services and it is exempt from the GST. And renting of motor vehicles for transportation of passengers to a body corporate for a period is taxable in the hands of the body corporate under the RCM. It has been clarified. And the expression public transport used in the exemption entry, which exempts the transport of passengers by public transport other than predominantly for tourism purposes in a vessel between places located in India, means that such transport should be open to public for point-to-point transportation, and such as transport in Andaman Nicobar Islands. This has been clarified in order to avoid any kind of problems in the tourism sector. Next slide, please. Some of the constitutional changes that were made, that all taxable services of Department of Post would be subject to forward charge. So the certain taxable services of department were under RCM. So now everything has been brought under the forward charge. And the GTA has been given an option to pay GST at 5% without ITC and 12% under the forward charge. But the option has to be exercised by the GTA provider at the beginning of the financial year, and RCM option continues. And for this year, that they have given additional time till 15th of September for those who want to opt for this new tax levy. And the service provided by the Indian tour operator to a foreign resident for a tour partially in India and partially outside India is subject to tax proportionate to the tour conducted in India for such foreign tourists, subject to condition that this concession doesn't exceed half of the tour destination. So this is a clarification sought by the tourism industry. Hence, the government has given such a change by making the suitable changes in the laws and rules. The next slide, please. Composition dealers were allowed to supply goods because composition dealers are not supposed to do interstate supplies. But now the permission has been granted to them to do interstate sales using e-commerce operators. So amendment made to the refund formula to accommodate refund of services also as a consequence to the Supreme Court directions. And facility of recredit of refund rejected in the electronic credit ledger has been introduced. And retrospective amendment made to the levy of interest only in cases where the erroneous ITC is availed has been put to use. This is a very important change which is being talked of ever since the introduction of the GST. Now the law has been finally made good. And provision has been made for transfer of balance of the electronic cash ledger. Mind you, it is a cash ledger to a distinct person's electronic cash ledgers of CGST and IGST alone. Next slide, please. So many circulars were issued, but one of the circulars which is of interest for many people is what is being reproduced over here. A contract to do or something or to abstain from doing something cannot be said to have taken place unless there are two parties. One of it is expressly or impliedly agrees to do or abstains from doing something, and the other agrees to pay consideration to the first party for doing or abstaining from such an act. So, in nutshell, what they are saying is that there should be two parties, and whatever is the service of doing or not doing has to be expressly agreed between these two parties, and then there should be a payment against such activity or inactivity. Then only it tantamounts to a service, and there must be a necessary and sufficient nexus between the supply, that is agreement to do or abstain from doing something, and the consideration. So examples are liquidated damages, late fee, compensation paid for breach of contractual obligation, check dishonor fee, employee notice pay, cancellation fee, fixed capacity charges for power, and all these cases are to be evaluated on a case-to-case basis, and then we have to come to a conclusion whether it is going to be taxable or not. This circular is a very elaborate circular, and it is better to go through it in detail to come to a conclusion on any of these activities. Next slide, please. So this is one other contentious issue in this 47th GST Council meeting, which is touted as a mini budget also because of the number of changes and the impact it has got on the industry. So there is an exemption provided for all the agri commodities and all the goods when they are not put up in the unit containers and not having any kind of a brand name registered or not. And the action will, if it is a registered brand name, if the actionable claim on such brand name has been foregone by way of filing a declaration, that the exemption used to be available or a concessional rate used to be applicable. But now this position has been changed. What they say is that pre-packaged and labeled is the words that they have used. So they have used the words pre-packaged and labeled in terms of the Legal Metrology Act. So when you want to understand what is pre-pack, is that it is a predetermined quantity. When it is packed in the absence of the purchaser, then only it is treated as a pre-packaged commodity. Similarly, the labeling requirements are narrated under the Legal Metrology Act and the Packaged Goods Act. So one has to refer to that to understand what is being labeled, because retail sale is there, wholesale sale is there. Hence, where exactly the labeling requirements are a must, are to be understood from the Legal Metrology Act, and only then a goods are not pre-packed or not labeled, then they are entitled for the concession. Of course, there are certain exemptions like fast foods. When they are sold, they are not labeled. And medicines, though they are labeled, but if they are under the Drug Price Control Act, then any goods which are of the non-standard weights and all, then they are going to enjoy the exemption. So in detail, if anybody wants on a particular commodity, then we can have a discussion. But otherwise, that I'm just touching upon this point in order to just bring your attention that these are the terms which are to be read very keenly from the law itself, and need to interpret on a case-to-case basis in their cases. Next slide, please.
Yeah. So, sir, before you go to the next slide, I will launch one more poll because you're going to cover GST on real estate. So let us launch one poll related to that. Okay, so audience, I hope you're seeing this on your screen. Do you think tax on development of plots is adequately clarified? I'll leave this on for the next 1 minute before we head forward to the next slide. Audience, any questions there is, please use the chat and QA because we will close in on the slides in the next 5 to 10 minutes, post which we will only take up question and answers. So the ones who have already mentioned, we will take up that first, followed by which the rest of the questions. Okay, I will end the poll right now and let me just share the results.
It is interesting to see the polling pattern. Though the fence sitters are 27% of them, but 35% of them have said that the clarification is adequate, but 38% are of the view that still there is some ambiguity. So let us discuss what is exactly the position now in the next slide.
Sure.
Next slide,
I'll
please.
just stop sharing.
Yeah. So it has been clarified that the sale of developed plots will not attract GST when the sale is to a customer, but such development undertaken for the landowner still will attract the GST. That is what is the clarification the government has given. So in nutshell, to detail that what is exactly the issue is, what they are saying is that when an empty plot, empty land is taken up for development by a developer, then when it is offered for sale to a customer, then in that case, the developed plot continues to be immobile property. Hence, it will not attract any GST. But after the development, when the developed plots are handed over to the landlord, initially the landlord has given to the developer the empty plot for development. So the developer has developed it and he is returning the developed plots to the landlord as per the agreement. So that developmental activity will attract the GST. So in the hands of the developer, when he is offering it for sale to a customer, there is no GST. But when he is returning the developer plots for the landlord, the GST will attract. That is what in a nutshell that the clarification is. Now the question is, when the landlord is going to sell the developed plots, what will be the situation? Then it continues to be the immobile property and there will not be any GST. I think I made it clear. And then many of the questions, participants have raised the question regarding this renting of residential accommodation. So most of the questions I try to answer it while detailing what is the legislative change. So if it is not clear, then certainly I'll address each of your participants' questions also individually. Now what the government is doing, for reasons not known to us, that they have brought the residential accommodation under the RCM only in case when it has been given to a service recipient who happens to be a registered entity. So if somebody who is having a GST registration takes a house for on rent, then he is supposed to pay GST under reverse charge mechanism. What has not been clarified in this whole thing is when the registered person takes that residential house under rent, in what purpose he is going to put to use has not been touched upon in the legislative change. So, if the registered person is going to make use of the residential premises for his office or for any commercial activity, then whether RCM is applicable, the answer is yes. But if he is going to use it only as a residential accommodation, the answer is again yes, that he has to pay RCM. So it is from the point of view of the recipient only, we have to come to a conclusion whether this rental service attracts the reverse charge or not. But as far as the service provider is concerned, if he believes that what is he offering under rent is a residential house, then there is no GST on it in his hands. So maybe this explanation may not answer all your questions, but definitely I will address each of your queries separately also in order to bring in more clarity. Next slide, please.
So, sir, I mean, I have two
Please.
polls.
Yes.
It's fine. I think I will take it up sometime later. Maybe
No, you can put one now and later after the slide.
Sure. Okay. All right. So, audience, I hope you're seeing this. Do you think bringing in residential accommodation under RCM in the hands of a registered person will serve any purpose? Okay. All right. I will just share the results. Or you know what? I'll give you another 10 seconds. After that, we will stop the poll. Okay.
Very surprising to see the trend of this poll that actually that is what is the situation. As you rightly said, 53% of the people are saying that whether it will serve the purpose, we do not know exactly to what purpose the government has introduced this RCM, but certainly it is adding on to our problems. But what is the gain for the government? Nobody knows. So I think that the government has to revisit this. It is a very good representation, though 50%, 50 people are there in the session today, but they are echoing the sentiment of larger public outside.
Right. Okay, so we can move to the next slide.
Yeah. So there is one more controversial amendment which the government has made, that the ICU rooms and the neonatal care and all that rooms are exempt, but otherwise any hospital bed where the charges are 5,000 rupees per day per patient are attracting GST. Somehow this is not gelling well with the composite supply contracts, because when any inpatient is admitted to the hospital for undertaking any treatment, normally package deal will be negotiated. So in that package, all the medicines, all the inpatient procedures, and the room rent, everything is included in the package. So there will not be separate consideration for any of these heads. But unfortunately, the government is now bringing in this kind of a legislation wherein they say if the bed charges are exceeding 5,000 rupees in a day, then it should be subjected to GST without any ITC thereon. So in a composite contract, artificially they are forcing the hospitals to vivisect the contract, which is not in the spirit of the several settled Supreme Court decisions. I think this particular legislation will be challenged in the courts in the coming days. Let us wait and see. And so this bundle service and the composite supply concepts have gone for a toss, and then the hospitals have got the additional burden of pro rata reversal of the ITC also, because that they are not entitled for the ITC on the hospital bed charges of 5,000 rupees and more. So we got to see what is there in store for us in the coming days. Expected litigation is there on this. Next slide, please.
Yeah. So that brings us to the end of the presentation. So we will take
this is my
queries.
Favorite time where that you are you can pose me any questions, and
Right.
I'll be happy to answer them.
So anyway, let the questions come in. Already we have a few questions also. What
Right.
I'm thinking is we will just share. I still have a couple polls, sir. So I will launch one now, and another one I
Yeah,
will
please.
take it up later.
Sure.
So this is in relation to the slide that was explained just before, that is healthcare sector. Do you think that taxing inpatients for hospital rooms is going against composite supply concept? Yeah, as I can see, most of them think that uh,
Yeah, it
actually
has
going
gone
against.
against the composite supply is 56% have opined, but still I am a little surprised about this 28% of the people who are of the view that it doesn't go against the composite supply concept. Of course, I cannot enter into a one-to-one discussion, but nevertheless, that maybe that I have to refine my way of presentation in order to make my point very clear to them, because it is definitely against the composite supply concept.
Okay. All right. So thank you all for the participation on the polls. Let us get to the queries now. So what I'm thinking is, sir, we can start with the Q&A tab first. We already have 10 queries there, and then we will look for questions in chat as well.
Right. And so I will go through them and I will answer it right away. So
Sure, sir.
Nandini
Yeah.
Vyas has raised a query: inverted structure clarification for trader, whether inclusion of service could help the trader claim inverted refund on account of accumulation due to high value overheads. Ma'am, inverted duty refund formula has been amended now with the Supreme Court's intervention. So if you have a lot of services, then certainly you can go for it and you are entitled. If you have got any supplementary queries or I did not answer to your satisfaction, you can raise your hand or you can put your supplementary question. I'll be more than happy to answer it. Bhave Jariwala has raised a question whether RCM is required to pay on ocean freight when import is on FOB terms, even after the Supreme Court judgment. I have answered this several times in the past also. I'm repeating once again. The RCM on ocean freight is only leviable when it is a CIF contract, not on the FOB contracts. And now, after the Supreme Court decision, irrespective of whether it is a FOB or CIF, the ocean freight RCM is not there. Now you might have seen last week in the newspapers also that CBIC is seriously considering and they are going to move a paper in the next GST council meeting wherein that they are going to drop the entire idea of taxing the ocean freight for the exports. Shyam, I need clarity on RCM on dwelling house rent if I am renting business and registered with GST. Shyam, this I have answered in my presentation itself that the RCM is from the point of view of the service recipient, not from the service provider. Then you believe that what is the property that you have given under rent is a residential property as per the Khata and other documents or the property tax documents and all, then you need not charge any GST on it. But from the recipient point of view, if he is not a registered person, then there is no problem for him. But if he happens to be a registered person, then he needs to pay GST under RCM, which is going to be his compliance burden, not by you, because you being the service provider, you need not worry whether it is subject to GST under RCM or not. It is the compliance burden of the service recipient to pay the RCM because he is a registered person. Trust, I have answered your query. Mr. Anil has raised whether e-invoice to be uploaded on the same day or generation. See, there is nothing called uploading of the e-invoice because the invoice once you have generated and you have sent it to the portal and you have received the QR code, then that is what is the e-invoice. So maybe you are thinking that the e-invoice to be uploaded means it is not invoice. Any invoice, when you have issued it, whether it is to be uploaded in the same date or not, when you have generated for e-invoicing purposes. If that is your question, then my answer would be that you have to generate the e-invoice only and only when you intend to really move the goods. Till that point of a time, if you generate the invoice and delay your EV bill and all, it may lead to problems. So my suggestion always would be that when you want to really make a sale and move the goods, then you go for the e-invoicing by uploading your invoice to the e-invoicing portal or otherwise. But if you simply want to recognize the revenue, but not exactly wanting to make a movement of the goods, then slightly you will be in a tricky position because reconciliation issues may arise if it exceeds the month. So that is what that you have to be careful about. Otherwise, any invoice generated, there is no mandate that it has to be sent on the e-invoicing portal immediately. You can delay it for any length of time, but the only thing is that when you really want to move, by that time e-invoice should be there with you. Trust, I have answered your question. Any supplementaries are most welcome. Then another question is whether a concessional rate of tax for job work is available to sub-job worker when such process is going on the goods owned by the principal. I'm not able to understand what exactly is this question, because whatever is the job work rate that is available, even for the subcontractors also, the same rate will apply back to back. There are no two rates for a same job work. The principal manufacturer has given the goods to a job worker. The job worker has done a part of it and he is assigning the balance to a sub-job worker. In such a scenario, then the same rate will apply. I don't think that there will be two different rates for it. If there are any supplementaries, Mr. Bhavesh, you can put, but otherwise I treat that this has been answered. In respect of Circular 178, it has created more confusion than clarification. While most of the activities explained in the circular looks to be taxable, the circular says it otherwise. In case of employee notice pay, it covers only forfeiture and recovery of bond, but not upfront payment by employee or the new organization towards buying the notice period. Sir, I think that you have to revisit the circular once again after this discussion with us today. See what the circular is saying, that anything which is there in the agreement, that is what is that we have to examine in order to arrive at the conclusion whether it is going to be taxable or not. So in a case where the employee is going to buy out the notice period, it is pure transaction in money. You are paying money so that the employee is going to join you early. So in that case, actually the circular did not touch upon this issue. So then a new employee or a new organization is buying out the notice period, then that particular payment does not attract any GST. That is very clear. But when you come to the other side, that when the employee is leaving his present organization by paying the notice pay period, then in that case, whether GST applies or not is what has been clarified. And therein what they are saying is it is not subject to GST because it is a failure in the contractual terms. No organization employs the employees to leave, but to serve only. Hence, there is no service per se because there is no agreement expressly there in the employment agreement saying that you have to leave the organization 3 months in advance and you pay me this money. Such a kind of terms will not be there. In a eventuality, when an employee is decides to leave, then he has to pay the notice pay. That's how it is. So the agreement is basically for serving with the organization, but not to leave the organization. Hence, there is no GST on that front. Trust, I have clarified to you. In case of long-term leasing of land, say 99 years or so, by the private entities, which does not enjoy specific exemption, how far is it right to levy tax on such lease premium? Isn't it akin to perpetual transfer of land? There's no difference when a 99 years of lease has been given by the private entity or by the government also, because SEZ lands and all these normally all the lands which are given to the industry by the governments and all normally will enter into a 99 years or more lease. So such leases are termed as fixed asset transactions only, and there is no GST on it. So you are saying that which does not enjoy any specific exemption, how far is it right to levy tax on such lease premium? And isn't it akin to perpetual transfer of land? Yes, it is akin to perpetual transfer of land, but I don't think that there is any kind of a GST levy on it. If you have got any thoughts otherwise, please let us know. In case of renting of residential property by a GST registered proprietor for his person use, which is not in the course of furtherance of the business, whether RCM is applicable or not. Again, the answer to this question is that you have to look at it from the point of view of the service recipient. If the service recipient happens to be a registered person, irrespective of the use that he is going to put to, whether it is personal use, official, or commercial, or residential, but if he is a registered person, then it is subject to RCM. Not in the furtherance of business, all these words are not there in the legislation. What they say is, if a registered person takes any residential property on rent, then RCM is applicable. That is what is the clarification for it. In case of GST on land development, will it be sale of service? No. This is what I have clarified, that if the land has been developed by the developer and offered for sale to a customer, then it is sale of fixed asset only, sale of immovable property. But when the development is complete and when the developer is handing over the developed plots to the landowner, then it is sale of service and attracts GST. Trust, I have clarified to you. Moreover, in case of an artificial person is taking residential property for use of its director, partner, employee, clients, etc., whether ITC thereof attracts disallowance. See, there are two questions. One, whether it attracts RCM. The answer is yes. So in the RCM law, it says that whenever you pay RCM, readily ITC is available. But now the question comes under section 17.5, as rightly pointed out by you. You have to see whether it is in furtherance of your business. If you take a house on rent and give it for the use of your director, partner, or employee or client, then is it in furtherance of your business? If you are confident that the answer is yes, then you can take credit. But if you feel that your answer is dicey, that it may be taking the color of a personal use, then definitely it is going to be questioned by the authorities and it will lead to litigation. If the trader is covered to apply for inverted structure refund, or it is limited to manufacturer and processor, there is no difference between a trader, manufacturer, or processor under the GST law. Any registered person, if he is otherwise qualified for an inverted duty refund, he can go for it. My client is a basmati rice dealer. He requires to pay RCM on rent used for godown. See, if he is a rice dealer, and I hope that he is a registered person, then he is taking a godown under rent. So, what is that we have to now decide in this case is whether this godown is treated, the godown premises is a residential property or a commercial property. If it is a commercial property, no questions asked, forward charge applies. It is not a reverse charge. But if it is a residential property and he is using incidentally for storage of rice and others, then because he being a registered person, RCM applies. But whether the ITC thereof is available, again, whatever I have just now answered, if it is in the furtherance of your business, ITC will be available, otherwise not. I think I have answered you. E-invoice is mandatory for outside of India, and also please confirm for debit note, credit note. Ma'am, in the e-invoicing, that they have made it very clear that for exports and all, that you have to generate it. For credit note, debit note, credit notes only can be uploaded in the system. So whatever you are uploading, e-invoicing is a must. Earlier also, GTA had an option to pay under forward charge or recipient to pay under reverse charge. What the difference was made in this council meeting by introducing the same again for a GTA? Good question. The thing is what they have now introduced is this GTA has got both the options in the past and currently also. The commonality of it is that if the GTA is availing any input credit, then concessional rate of 5% is not applicable. It is a 12% rate will be applicable. But if he doesn't want to, if he wants to go for an RCM, then the recipient has got the bounded obligation to pay it under RCM. So that's the only difference. There's nothing new in it. So the GTA option for forward charge and reverse charge both are available. If any GTA is willing to charge it on a forward charge basis, then he can do. Then he has got two tax options. Without ITC, 5%. With ITC, it is 12%. But if he is going to charge it on a forward charge basis, then the recipient doesn't have anything to do. But if the GTA doesn't charge and on his invoice, if he makes a declaration that this is under reverse charge, then it is for the service recipient to pay it under the reverse charge. So the situation is the same as in the past. Thanks for the clarification. The issue is we are taking on rent, so we have to pay RCM. But when we billing, we can't charge as it's residential right. So a hit of 18%. Syam sir, I did not answer your question. So if you can repeat, maybe that I will be able to answer it. For the time being, I am closing it, but you are at liberty to raise supplementary on this to clarify. TDS on perquisite 194R, how will be the treatment and valuation under GST? Could you please explain a small example on the same? Any TDS deduction made under the income tax law on the perquisites under the 194R provisions and all are a transaction in money. So there is no GST on the TDS portion of it. But if your question is about the perquisite itself, then if the perquisite forms part of the employment agreement, then in such a scenario, there will not be any GST. But if it is outside your employment agreement, then there will be a GST. You wanted an example. I can quote you one small example. Canteen expenditure. I do not know whether under 194R that you are going to deduct any TDS and all that, because I don't think that it will attract any kind of a TDS, because this is some kind of a perquisite which is given to all the employees. So when employee consumes the food in a factory canteen, then there will be a cost attached to it. So if the company decides not to charge the employee or to charge him at a subsidized rate, then whether the GST is applicable or not is the question. But if the employment agreement entered with the employee clearly captures this issue that you are entitled for the canteen food at a subsidized rate, then I don't think that you need to really break your head that what should be the GST, what should be the value of the food. And because employer and employee are related parties under the GST, then how I have to arrive at the value and how I have to discharge the GST liability. Because once it becomes part of your employment agreement, means it is following from the employment contract itself, hence it is outside the GST purview. So that is what is the clarification the circular has given. So take advantage of the circular wordings and then defend your position in case of perquisites. But there are some kind of a perquisites wherein that a employee has been given a long-standing award, some 1 lakh cash is given to him. In such a scenarios, how it happens? Then because employer are related parties, then 50,000 and above, the limit of 50,000 up to 50,000 rupees, that there is no GST, and beyond 50,000 per employee in a year, then there is a GST. Then in all such cases that you have to go by the calculation and you have to see whether the perquisite given to him is exceeding that limit of 50,000 rupees. And if it is exceeding that limit of 50,000 rupees, then certainly, yes, GST is applicable on such kind of perquisites. So you need to make a clear distinction, and to the extent possible, your employment agreement should capture all kinds of perquisites being rendered to your employees. But if anything is missing the bus, then definitely you have to again examine whether those put together are exceeding the 50,000 per year limit. And if they are exceeding, certainly you have to bother about the GST. That's how it is. And whether GST is applicable on slum sale. Slum sale is a sale of business as a going concern. Hence, it is exempt from GST levy. Whether ITC on CSR expenses is eligible. Again, the question is that whether the CSR expenditure is in or in relation to your furtherance of the business, because and whether it is mandated under any law. The answer simply sitting in the industry, anybody will say that yes, CSR expenditure is mandated under law. If any company which is into profits has to spend money, 2% of their profits under CSR, hence it is mandated under law. Hence, I think that since it is mandated under law, ITC should be available. That is one argument that you can put up. And the second one is whether it is in the furtherance of the business. Yes, when some companies undertake CSR activities, then the company's brand image will improve in the market. So certainly it is in or in relation to the furtherance of business, you can take an argument. But unfortunately today, the GST tribunal is not there in place, and many of the AAR decisions have gone either side, but majority of the decisions say that CSR expenditure is not in the course of business. Hence, the ITC thereon is not to be taken. Unless we hear from a higher forums, which have got a citational value, we can't confirm whether ITC on the CSR expenditure is going to be eligible or not. So till that point of a time, the debate goes on. In renting business, taking residential house on rent, as we are registered with GST, we have to pay RCM. But while billing, we can't charge GST as it's for residential purpose. I can't take GST input also as output income from renting of residential tax. Rent is exempt in my understanding. So Syam, what you are essentially saying is that you are in the renting business and you take houses for rent, and with a clause that they can be sublet to others by you. So if that is what is the kind of business you are in, then yes, you have a problem. Because when you take a rent on residential houses on rent with a clause that you can sublet to others, then in all such cases, what happens is that you will be liable for RCM payment. And but when you sublet it, then at the time that when you are raising your bills to your service recipient, then because it is for residential purposes, you will not be able to charge them the GST. So whatever is the RCM paid by you will be sitting as a credit, but without any kind of output use of it. And certainly this is a case wherein you may not be able to go for an inverted duty refund also, saying that my input is at RCM 18%, but my output being at 0, that whether I can go for an inverted duty refund, you may be wondering, but the authorities may not be extending you this benefit. So all those, normally what happens, why the government did not think of this scenario is, normally in the renting agreements, subletting option will not be given. But if it is really a big business, then it is time for you people to represent to the government that those who are in the subletting business are having this problem, that on the input side, that they are forced to pay GST because being a registered person, RCM has to be paid. But on the output side, because it is given only for residential purposes, that you can't charge the GST. So whatever RCM you have paid is remaining in your books as an input credit without any kind of a use. And the inverted duty refund is also not supporting your cases. Hence, it is going to be a problem. So it merits a representation by you. Trust, I have answered your question. Then whether remuneration to directors exceeding the permissible limit under company law is liable for GST. See, any remuneration paid to the director, if he is not your full-time employee, then you need to decide that what for that remuneration has been paid. If the remuneration has been paid for as a sitting fee and is to and fro conveyance expenditure or as a hotel accommodation and all that, so all these activities attract RCM. So irrespective of what the company law permits, whatever it may be the permissible limits by the company law and all, whatever is the amount that you pay to a director attracts RCM. Hence, you have to pay the GST on them. And then, can we avail ITC on uniforms provided to the employees? Can it be considered as in the course of furtherance of business? Please note that no amount has been recovered from the employees on such uniforms. Nagasandeep, there are many questions around it. First, how are you getting these uniforms? So there are companies which buy the cloth and they get it stitched and then ultimately give it to the employee. So on the cloth purchase, whether you are entitled for a credit. So whether you can take a position that purchasing of cloth is for furtherance of your business, you cannot say. Is there any mandate that the employee has to wear a uniform? I don't think that there are any laws which mandate that employees have to wear a uniform. There are laws which say that those employees who are working in hazardous areas or specially demarcated areas in a factories are to have a separate dress code and maybe that radium coated cloths and all that, so that in case of any kind of an accidents or when there is no power and all, but at least that we will be able to identify that there is a person working. So such kind of mandates are there, but nowhere under the Factories Act or under any other laws that employee uniform has been mandated. So if some companies, because that they want to develop some kind of a discipline inside the organization or to distinguish between the people who are working in the office and who are working in the production area or in different production areas with a color code and all that, if they have introduced the uniform, then it is being done with their own wish. Hence, there is no law mandating that such a uniform has to be provided. So in such a scenario, I fear that the ITC thereon is going to be permitted to you. Moreover, when you are handing over these kind of a uniforms to your employee, if it is not forming part of your employment contract, that during your employment with this organization, that you are entitled for these many number of uniforms, so that you are supposed to work during the office hours wearing this uniform only. If such kind of words are not there, then the cost of uniform will be counted towards the 50,000 rupees limit that is there. And beyond 50,000 rupees limit, if any kind of perquisites are given to the employee, then they will attract GST. So you need to be mindful of this also on the other side. Hope I have answered your question. Siddharth, I am done with all the 21 questions under the Q&A.
Yes, sir.
Slightly I missed out in this chat box. So let me just see that.
So I'll actually moderate that for you, sir. Let me help out. In fact, since you are anyway going with flow, I didn't interrupt in between. So let us go from the bottom actually. So question from Mr. Mailadri on GTA forward charge done by GTA. No need to do the RCM by recipient. Oh wait, there's a follow-on question. So he's paying guest accommodation for students per month, 7,000 charges. On GTA forward charge done by GTA, no need to do the RCM by recipient. Not sure if I understood this.
No, at 4:18 p.m. the question.
Correct.
Paying guest accommodation for students per month, 7,000 rupees charges.
Yeah, Mr. Mailadri, if you can explain this a little better, it would be great. Or if you would like to directly come on mic and explain that, we can do that also, sir. Yeah, so I'd like to mention to the audience quickly, those of you who would like to unmute and talk directly to Mr. Akella, I can do that. Just let me know. You just have to give me a yes or no on chat. I will be able to give you the permission. I'll go up a little. Mr. Shailesh, please confirm the ITC availability on RCM paid on renting of dwelling house.
See, that I have answered. See, the ITC is always controlled by the 17(5) provisions. So, if renting of the dwelling house is in or in relation to your furtherance of the business, ITC is available, otherwise not. So, if you are in a position to answer that question, then I think that your question has been answered.
Right. So, Mr. Shyam has actually raised his hand. Mr. Shyam, would you like to unmute and talk? Is that why you raised your hand? Just let me know on chat, sir. I will be able to allow you to talk. Okay. We'll wait for Mr. Shyam. In the meantime, Mr. Mailadri is saying, yes, sir, 7,000 collecting from each student, paying guest house coming under GST and GST regime.
See, guest house is not a residential accommodation. That has been amply clarified under the GST law itself. So it will be treated as a commercial establishment, because residential accommodation has got a lot of connotations, whether it is for 3 months period. A lot of discussions are there that what comes as a residential accommodation. So when a guest house has been taken by a person who is running a guest house, and he is in turn giving the rooms to the students, irrespective of the collection, first what you have need to understand is what you have taken under rent, which you are having a sublet clause, wherein that you are giving it to the students for 7,000 rupees per month, is a secondary activity. First activity is that this guest house manager is taking some residential property on rent. So if he is a registered person, then RCM applies on one side. So on the other side, when you are giving it for the students, then it is treated as a short-term accommodation only. In all such cases, that GST applies. So your RCM will be of use for you for discharging your output tax liability on forward charge.
Right. Hope that answers your question, Mr. Mailadri. Akella sir, I'm going to allow Mr. Shyam to talk. He says he wants to interact. Let me just, sir, you should be able to unmute now and talk.
Yes, happy afternoon, sir. I'm Shyam here. Hope I'm audible, sir.
Yes, sir.
Yes,
Yes, sir.
yes. Loud and
Go
clear.
ahead.
First of all, let me thanks both of you, sir. I'm the first timer, but I'm really happy to attend this session. And my point was only on that RCM on residential, and I got a good clarity. I think we'll ask my client to go for that because it is going to hit us by 18%, because margin is not that much, sir. So the business is going to be, I think there are so many other business houses are also there in this type of business. I think
Yes.
the association will take care of that.
You have to.
Because
On
18%
immediate
you cannot.
basis, because that I have not come across that a large revenue is being generated in this particular sector. But if with this sublet clause, if there are many players in the market, it is high time that you need to represent through an association and make a lot of sound. Otherwise, you will be hit on both the sides.
Yeah. So I will not take much of time. Thanks, sir. And I will be happy if I will get a chance to attend your further anytime this type of seminars and
Absolutely no
webinars.
problem, sir.
Thanks, sir.
Yeah, absolutely, Mr. Sham. We will send you the links going
So
forward.
nice of you, sir. Thank you.
Thank you.
See, Malyadri, you have raised a question saying that whether forward charge and RCM both are applicable. See, both options are there. It is for the service provider to decide upfront in the beginning of the financial year whether he wants to go for a forward charge or he wants to be under the reverse charge. If he decides that he wants to go for a forward charge, then there are two options for him, with ITC and without ITC. So it is his choice. So once he gives the bill with some forward charge, with ITC or without ITC, then there is no further action in the hands of the service recipient. But if the GTA service provider decides to go for a reverse charge, then the obligation is now cast on the service recipient. Now the service recipient has an option to pay it under RCM. So that is what is the clarification, which is already there in the service tax law. There is no change which was brought in. They have simply clarified certain confusions which are prevailing in the trade, and that is what that they have done. So the forward charge is there, reverse charge is there, but not on the same transaction that the service provider will be giving you a bill with a forward charge, and again the service recipient has to pay it under reverse charge also. It is not this. In GTR 1 showing, what is that it is showing? I do not know.
Mr. Mailadri, would you like to interact directly? I think that would be better,
Yes.
in fact. Yeah,
Yeah,
okay.
yeah.
I will just give you the permission. 1 minute. Yeah, you should be able to talk, Mr. Mailadri.
Sir, you can explain. Mr. Malyadri.
Yeah, you will have to unmute.
Unmute yourself and then talk.
Just 1 minute. I will just let me just give you permissions again. 1 minute.
Hello.
Yeah,
Yeah.
we can hear you now.
Sir, in GST 1, some of the transporters they are uploading. It
Okay.
is showing under reverse charge.
They are uploading and it is showing under reverse charge.
Yes, sir.
Okay. Then in that case, have you approached them and asked them, or whether their invoices are saying that it is under reverse charge?
But invoices nothing is showing, sir.
So then you have to reach out to them and ask them, insist on them that your invoice should say that it is under reverse charge. Otherwise, how do you come to know about it?
That's why we are also charging in our side. That's why it's a double impact.
No. Don't enrich the government at your cost, sir.
Okay.
So you have to make it very clear that whenever you are receiving an invoice, if the forward charge is not visible in it, then certainly you have to approach the service provider and ask him whether it is under reverse charge. See, I'm an
Okay, sir.
advocate.
Okay.
You take any
Yeah.
service from me. When I give
Hmm.
my invoice, in the invoice, there is a line which clearly says that this invoice is issued and you are supposed to pay the tax thereon under reverse charge.
Yes, sir. Yes or no? It should be there.
Yes. So if it is not there, you insist on your service provider, sir, please.
Okay. We'll take the declaration better, na, sir.
Yes, yes, yes. You have to. You have to take.
Okay. Thank you very much, sir. Thank you.
Thank you.
Okay, sir. Okay.
Siddharth, sir.
Yes, sir.
Two
I
more
think
participants have raised their hands.
okay. So one is Mr. Malayadri himself. I think he's done. So
Ah,
I will just allow Ms. Vaishali to talk. Just
yeah, yeah.
I think she just Ms. Vaishali, would you like to interact? I think you just took down the raise hand option. Yeah. Okay. Let me just give you permissions. You'll be able to talk now.
Hello,
Yeah.
sir.
Yes, ma'am.
Basically, I'm holding a doctor's degree. Means it is called as a doctor in physiotherapy, but basically it was BSc physical therapy in 1970. Now it has become doctor, but I'm not getting any GST benefit because I'm not utilizing that services either for my bread and butter. I have opted for export and import consultancy. Now, how do you, supposing if I go to the hospital, I have to pay GST. I said, I'm having a doctor's degree. Then why, when other doctors are getting degrees, I mean, they are no exemption in GST. Why should I pay GST? I don't know. I
There
can
are
share you my certificates. I'm GS medical graduate in 1970 from GS KM Hospital, and I'm a alma mater. I was there, and this is a very crucial question because I had gone through sonography or whatever may be, and I had to pay. I didn't pay any. This is what I said, and as a service provider, we are paying 18%. Of course, I am not worried about this one, but in my case, I am having questions. Please explain, sir. Thank
yeah.
you.
Thanks that you have taken time to attend this session and you are there till now. That the question is that you may be a doctor, but there are two aspects to any service. There is somebody who is providing the service, and then there is somebody who is receiving the service. So when the provider is giving any kind of a services and collecting any consideration from the recipient, then he has to analyze at the end whether GST is to be charged or not. As rightly told by you, that when the doctor is rendering any healthcare services, they are exempt. So when the doctor is attending to a inpatient and then he is rendering any services for which he is collecting some consideration from him, there is no GST on it. So he will not charge any GST and he will not collect and deposit the GST to the government. But there are some wherein that the service is subject to GST, then the recipient has to pay that GST as given in the invoice. In the invoice itself, the GST amount will be mentioned and you have to pay. But if there are people who are registered, then on the input side, if you have paid any GST, then if that input is for furtherance of your business, then while charging your customers, you can certainly make use of the GST that you have paid, and then you can offset it against your output tax liability. So how it works, I will tell you with an example so that maybe it will make some sense to you rather than putting it in all the legal language. I'll tell you, man. If somebody is there who is a trader, so he is buying some commodity at 100 rupees and paying GST thereon at 12 rupees. So he gets an invoice where 100 rupees and 12 rupees will be shown. So this trader is making a sale for a profit of 50 rupees. So at 150, when he is selling this same commodity, then he has to charge 18 rupees of GST because 12 rupees is the rate, 12%. Hence on 150 rupees, he will be charging 18 rupees. So while discharging his output tax liability of 18 rupees, he will be collecting 150 plus 18 from his customer. So, but while accounting it to the government, what he will do, then I bought this material at 112 rupees. I have already paid tax of 12. Now, while making profit by selling this product at 150 and 18 to the customer, so this 18 rupees is accounted in such a way that 12 rupees already I have paid, and out of my profit of 50 rupees, I am going to pay you 6 rupees. So that's how it gets knocked off. This is what is the mechanism of GST, to put it in a very rudimental manner to a layman. So in your case, you being a qualified physiotherapist, if you are paying GST on any of these services that you are receiving, and if you are a GST registered person, and while giving services to any of your clients that you are charging them any money and on which GST also, then certainly you can also take advantage, provided the input service is in or in relation to your output activity. So why I am using again some legal jargons is that if you are going for a holiday and you have approached the some Sita Travels or somebody to book your entire holiday, and for that they have charged you something. Your holidaying is not in or in relation to your business. You are a physiotherapist, so it is not in relation. Hence, you are not entitled for input credit. Such credits you cannot take. But the mobile phone that you are using, the telephone, or the place where you are providing your services to your clients, the physiotherapy services and all that, the rental accommodation, all such kind of things you can avail credit. So those which are in relation to your business, you are entitled for credit, and those credits you can use it to offset against your output tax liability. And this is how the GST mechanism works. Hope I have answered your question.
Let's see in the next this September, like I have already paid. I'm quarterly person, and
Okay.
so let's see in the next quarterly return. What,
Yeah, with
because
this
already I
understanding,
have every month I'm paying.
right.
Of course, I'm paying, filing out 3 bar GST or 3B once after 3 months, but I'm paying tax on services every month.
Okay, okay. Sure, madam. With this understanding, you just approach it, then maybe things will be clear for you.
Thank you, sir.
Bhavesh, you have raised a question whether
Thank you.
RCM is applicable to foreign commission charges deducted from the Indian entity through Indian bank from export proceeds. So it seems that you have made some export, and out of that export, when the banks are transacting the proceeds thereon, the foreign commission means that you have engaged any kind of marketing agents for doing this export. If you have paid any commission to them, that is different. But if it is a commission which is paid purely to the banks, then the treatment is different. So I need a clarity that what exactly is this question. RCM is applicable to foreign commission. What is this foreign commission in relation to? Is it that you have engaged with some marketing agents over there to whom that you have paid any commission for getting this export order? Then in that case, that will form part of your export consideration, and I don't think that there will be any GST on it. But if it is in relation to the money transfer between the banks, that foreign bank and the Indian bank, then that banks will take care of the GST thereon. If you have got a better clarity, maybe that I can discuss and then close it for you. But otherwise, if these answers suffice, then I'll leave it.
Yeah. So, sir, there's a it looks like Mr. Vijay actually wants to interact.
Yeah.
I will just quickly allow him as well. Yeah, you should be able to talk, Mr. Vijay. You will just have to unmute. That's about it. Okay. Let me just pop a message. Nothing as of yet. Okay. Let me just give him probably a minute, sir. In the meantime,
no problem.
I did spot one question somewhere on
Yeah.
the top. Just let me know if this is already taken up, sir. From Mr. Narayana Reddy, RCM on material, that is scrap PET bottle and milk cover, purchased from unregistered dealer.
URD purchases, there is no RCM as on today. There is no RCM on it. URD purchases are not subject to RCM now.
Okay. All
Vijay
right.
has confirmed that there's
Yeah.
nothing from his side.
Yeah. So looks like we have extended our webinar by half an hour, but quite the insightful session indeed. So let us spend probably another 2 minutes. I will see if there's any more questions coming, and based on that we can wrap up.
Sure.
Okay, audience, any further questions? Also, I'd like to mention that you will receive a post-webinar mailer with the stream link, that is whatever the webinar just that you are part of. And aside that, we will also share the presentation and mail ID of our speaker himself. So those of you who would like to drop him a mail with your queries or anything as such, he will be more than happy to attend to your queries. Okay. No queries at the moment. So I think we can call it a day, sir. Looks like we don't have any further questions. So if there's anything
Thank
else,
you.
anything else, I think you can take it up over mail itself directly.
Yeah, sure.
And
Thanks for all the participants who have stayed till the last, and then really it's a good session for me also to interact with you all on this weekend.
Absolutely.
Hope I was able to answer to your satisfaction
So
on
there are
all the
two
matters.
questions, sir.
There are two more questions which have come. I don't want to just leave it.
Right.
As per notification 13 of 22, can we claim refund of GST from 2018 onwards? But the time period is given only 2 years. So, Mahesh, that you need to be within that 2 years limit only, that you cannot claim it for 2018. What is the notification that you are referring to? I don't think that it is going to permit you for the refunds of the past period. And second thing is that there is an interesting development which has happened. Now the Supreme Court has ruled that the TRAN credit portal has to be opened again. So because once the portal opens, then there will be recomputation of all your credits and all, which may also bring up this kind of an issues. So we got to wait and see that how it transpires. But the refund claim period is only 2 years, not beyond. And then there is one more question from Shravan. Shravan, my query is given below. Kindly advise. We have undertaken a transaction with an SEZ zone under zero rated supplies. Now we want to claim GST refund under LUT. Given the same, we are now in need of endorsement from the specified officers. However, they are refusing citing provisions of Rule 30. Kindly advise. You have we have undertaken a transaction within the SEZ zone under zero rated supplies. Now we wanted to claim GST refund under LUT. Query is not clear. Is it a interzone transfer that one SEZ unit has supplied the materials to another SEZ unit? If that is the case, then where from that the GST refund can come in? So it may not be the case. If it is a case that a DTA has made a supply to SEZ under the LUT and you want to go for a refund, then only the endorsement from the officer will come into the picture. But what is this Rule 30? The officers are citing, saying that they cannot sign it. So, Mr. Shravan, if you can clarify further, maybe that I will be able to answer your query better. because the way that you have written, it is not making it very clear, because we have undertaken a transaction within SEZ zone. When you say within SEZ zone, means it is from one SEZ to another SEZ. I don't think so, because then you will not be saying that you wanted to claim GST refund under LUT. That question doesn't come. So I am understanding that a DTA has made a supply to SEZ, and they are waiting for the SEZ to endorse their supply invoice, for which the officers are citing some problem. So what is it exactly the issue? Because if the goods are supplied by DTA to an SEZ for its authorized operations, the officers are bound to endorse the invoice and give it to you. In the alternate, the SEZ online portal, they will be accounting for these goods. Hence, a printout from the SEZ online portal also will help. So I think that you have raised your hand. Please ask the question in person.
I think that's a better thing to do. Let me just give you permission. Yeah, you should be able to talk.
Yes, sir.
RCN is not applicable, Bhavesh, for SEZ. Yeah.
Yes, we are raising a invoice within SEZ, one SEZ unit to another SEZ unit, sir, under LUT.
Correct.
Since we are doing a transaction within SEZ, the officer is referring the rule 30, because we need to claim a ITC refund. Our rebate, sir, we are charging rebate. So under IGST mechanism, the receiving.
But see, when you are supplying from one SEZ unit to another SEZ unit,
Yes,
you cannot pay IGST under the claim of rebate.
But
Isn't it?
Yeah.
Then one SEZ unit is making a supply to another SEZ unit within that zone, then you cannot pay IGST on it under the claim of rebate. It has to be under LUT only. But that also, because it is a within the zone, when you are making a transfer, I don't think that there will be a formal invoice also. No? The document is different for it.
Sir, if that is the case, sir, the accumulation of input tax distribution of credit, how we need to take that credit, sir?
See, that is a different question. See, the accumulation happens because of many reasons, not just because that you made a supply to another SEZ unit within your zone. Accumulation has got many reasons for it. So, for addressing your accumulation, you have to again think of solutions at your end. But you cannot say that I want to claim a rebate for my supplies to another SEZ, cannot be the plea.
June.
If you have an accumulation, yes, then you have to think of some alternatives.
But I doesn't have any output service, sir, because within the zone has a developer. We can use only for within the zone.
Developer and unit, no. This service between developer and unit.
Developer and unit
Within the same zone.
Oh, between the same developer and zone that you want to do this
zone,
service invoice on payment of IGST, and you want to encash it.
Yes, sir. Yes, sir. Yes.
This question is from Biocanti.
Yes, sir.
Okay. But between the developer and the unit, the considerations also will not be paid. So if you are raising a service invoice on payment of IGST under the claim of rebate, definitely the officers will be having a concern to sign it. But any developer's invoices are for authorized operations only, because developer is expected not to provide services for unauthorized things. So you have to find out with the officer why exactly he doesn't want to endorse this copy, because a developer is not supposed to render services outside the zone, and within the zone also, that whatever the developer is doing, it is with the consent of the his LOA, and it is for authorized operations only. So a developer cannot give services except for this canteen services. I don't think that the developer is going to give any kind of a services outside the production area, right? So in such a scenario, every activity done by the developer is for authorized operations. So it goes without saying that it is for when it is for authorized operations, then it should be permitted. I do not know what is the Rule 30 SEZ law that they are citing. What is their argument?
Their argument is rule 3015 within zone you have do the any transaction. The books you need to adjust with the books of accounts only. There is no need of endorsement at all.
But the money gets adjusted in the books.
Correct, sir.
But endorsement is required because that there is a mandate under the GST law for seeking a refund. No.
Correct, sir. But they are in line with the SEZ. They are not accepting the GST law.
No, but they cannot say that I will not accept. No,
They
there is a
issued one.
clarification also saying that this endorsement, if SO is not giving, AO has to give. All that kind of clarifications are given. Those are from the GST law only. They cannot say that they are living in China while drawing salaries from India, right?
Yes, sir.
It is a deemed fiction which got created that SEZ is a place outside India. That does not mean that they belong to China, right? It is a deeming fiction. You cannot extend the fiction beyond a point. It is created for a selective purpose. So the purpose is that there are certain benefits which are extended under the law. Only for those benefits that you have to treat it as a separate land. But otherwise, you are controlled by the Indian laws only.
Got it, sir.
Right. So there is a question that cross charge applicable when principal supply is exempt. When principal supply is exempt, what is that you are going to cross charge, sir? When it is an exempted supply that you cannot do any kind of a cross charge, no. When it is a taxable supply only, you will have a credit which has to be cross charged. If the service is taken by two different entities. Otherwise, there is no question of any cross charge of an exempted supply. There is another question. Within a state, stock transfer to a unit within 7 kilometers need to raise a GST invoice. See, stock transfer is a word which is very casually used. If you are doing a supply between your own companies to two entities, so both are having the same GST number, and then you are making a supply, in such a scenario, it goes with a gate pass only, because the GST books are not going to be impacted. But if the stock transfer is between two entities which are having two different GST numbers, even though they are within 7 kilometers, GST invoice is a must because there is a supply. What is exempt is your e-way bill because it is within 50 kilometers range. And but that too, if the supply value is not exceeding the 50,000 rupees limit. So Malayadri, you have to take care of these things. If the supply is between two different GST registrations, then e-way bill may be exempt because it is 7 kilometers. But if the supply is between two GST numbers, then definitely GST invoice is a must. You cannot wish away with. But if it is with the same GST number, but two different units, because both will be having the same GST number, in such a case, GST invoice is not required. Hope I have answered your question. And then Shailesh is asking what documents are required for providing supply to SEZ. What document that you require, that you need to have a LUT in place first, which you have to execute at the beginning of the financial year. After that, you simply prepare one invoice and then the SEZ online that they will generate the invoices, other documents for receiving the supply from your end. Any other questions, sir?
I think we have answered everything, sir. So
How to?
yeah,
Can't leave anybody without any answers.
that's right.
Maybe that they might not have satisfied them. That's a different matter for which that they can always have the freedom to raise a supplementary or reach out to me on my mail.
Correct. I think that that will bring us to an end, sir. So let us close the session. Okay, there's one more. Malyadri. Mr. Malyadri.
Yeah, goods sent on job work to a different entity, then job work challan is a must. Invoice is not required.
Oh, yeah. It's only sent to panelists,
Yeah.
but others can't see it. All right. On the side note, I'd also like to mention those of you who've shown interest for our demo. My team will reach out to you probably in the next 3-4 working days. Based on that, we can interact and schedule a demo based on what exactly you're looking at. So please expect a post-webinar mailer, as I had mentioned, with PPT, recording link, and Mr. Akella's mail ID as well. So anything there is, please feel free to reach out to us post-webinar. Once again, thank you all for your time, and huge thanks to Mr. Akella for having spent yet another 2 hours on our webinar. In fact, thank you so much for your efforts and time, sir.
Thank you. Thank you very much.
Thank you all, and have a wonderful weekend. Thank you.